Employee stock ownership plans, or ESOPs, have become increasingly popular. For example, Harley-Davidson recently announced one. I'm Mary Kathleen Flynn. I'm the editor-in-chief of Mergers and Acquisitions, and I'm here with Mary Josephs of Verit Advisors. And Mary is a longtime expert in ESOPs. So Mary, tell us about why, in particular, private equity firms such as KKR are interested in ESOPs today.
So KKR has been a leader in private equity, and they really think about it as employee ownership, not necessarily the traditional ESOP. And what they have discovered is they get superior returns in a quicker time frame because of better employee engagement. The statistics are there with Gardner Carton, and we're very excited that another large, reputable industrial firm like Harley-Davidson has adopted that model.
Okay, great. And tell us a little bit more. I know you've looked into KKR's results from its portfolio companies. Try to make it a little concrete for us.
Sure. What they did. Let me tell it with a story. Pete Stavros, who is really the thought leader in continuing to advance this model, at Gardner Carton, he was taking a drive along with one of the truck drivers that did, I think, overhead doors, if I have the story exactly right, going through the Midwest. And the driver says to him, if I was paid differently, and not by miles, but by some other metric of efficiency, I could get this done a lot quicker. And what Pete can say is through thousands of stories like that, of empowering the employees to make decisions that would create better operating results, they've been able to really debunk the myth that sharing equity as much as 10% of the overall pie with employees, that dilution more than pays for itself with increased engagement and operating performance.
So it boosts employee morale.
Employee morale and employee engagement and operating performance. So it's a win-win-win. You get the culture and you get the engagement and you get the thoughts and ideas from people who are on the line working.
And do these plans involve more than just ownership? I mean, so for example, is there a culture shift to having employees feel like they own the company?
Sure. National Center for Employee Ownership has long stated that just by putting up a flag and saying you have an ESOP or other form of employee ownership doesn't move the needle in employee engagement or culture. You also have to embark in a communication strategy and make it real for your employees. Have a thought box and read the thoughts and get back to the employees. And then some of the more forward-thinking employee-owned companies have meetings. They share financial data that's key to performance and celebrate wins. In a retail industry like a Wawa, that might look like measuring shrink and celebrating being able to manage that better, which goes right to the bottom line.
And what about during the COVID era? Has the pandemic increased the appetite for ESOPs?
The pandemic has absolutely increased the appetite for ESOPs. Why? I think privately held business owners are realizing that something could happen to destabilize the value of their asset, their business. So they're looking at transition and diversification, and ESOPs are on the table. Another reason is I think we're working on 3 processes right now that were originally a traditional M&A market process. And through the process, the business owner sort of waved their hand and said, is there another way? And are now moving forward with an ESOP. And that is with sellers, Mary Kathleen, of private businesses and private equity businesses as well.
And you help companies adopt these plans and advise on them. So what are some of the challenges that your clients face and how do you help them?
The 2 biggest challenges for an ESOP, which is different from the KKR model, are 1, cash at close. An ESOP really struggles bringing as much cash at close to the table as a private equity deal. And that's why I'm excited about the article that you're going to publish in March about ESOPs and private equity. Is private equity, a growing number of private equity firms have learned how ESOPs work and have become co-investors with employee ownership. and thereby being able to bridge that obstacle that ESOPs have in not bringing as much cash to the table. The second and probably biggest obstacle in an ESOP is it's a retirement plan. It's not a operating strategy or leadership. It does not solve leadership succession.
Okay, good. And tell us about the future. What do you predict will happen with ESOPs moving forward?
We see a growing number of capital providers and ESOPs getting pulled in under the growing tranche or asset class of social impact, as I'm sure you're aware of. And we're seeing, boy, every major middle market bank in the country, from JP Morgan, Bank of America, Wells Fargo, PNC, have ESOP groups to be able to support these transactions across middle market. When I look at conference attendees, it's up. And as the growing number of private equity exits occur and private companies transitioning, I see ESOPs continuing to take a bigger share of that. Right now, I think it's around 6%. I could see it getting as high as 8 to 10%.
All right, well, thank you. I think you're going to be busy in the future.
Yes, gratefully.
Thank you. Thank you very much, Mary Josephs from Verit Advisors. And as Mary mentioned, she's written an article that will be in the March issue of Mergers and Acquisitions all about this. Thanks.
Thanks, Mary Kathleen. Be well.
You too.